Welcome to Talk Tickers, where we break down the earnings calls that matter. Today, we're diving into AngioDynamics, ticker ANGIO. They just dropped a pretty significant quarter, so let's get right into what it all means.
Okay, first things first, let's look at how the market reacted. Because, wow, this is exactly what a classic beat and raise quarter does to a stock. That huge jump pre-market, yeah, that tells you the whole story right there. Wall Street absolutely loved this one.
So the headline here? A blowout quarter. And look, AngioDynamics didn't just squeak by expectations. Nope, they completely reset the whole narrative. We're not talking about a turnaround story anymore. This is a company firing on all cylinders, in full-on growth mode. All right, let's break down the actual numbers.
And here are those numbers. A really solid beat on both revenue and earnings. You can see revenue came in about $3 million ahead of what analysts were looking for. And the adjusted loss per share, well, it was a smaller loss than expected, which is always a great sign. It's just clean, strong execution. Simple as that.
But honestly, this is the number that really got my attention. A positive $2.2 million in adjusted EBITDA. Now you have to remember, last year they were losing money on this line. So to swing from a loss to a positive like this, it's huge. It proves their path to being a profitable company isn't just a plan on a slide deck. It's actually happening, and it's happening faster than people thought.
All right, so where did all this good news come from? What's the engine behind these numbers? Well, it all comes down to their big strategic pivot. They've been focusing on their high-growth, high-margin MedTech business. And wow, is it paying off? This is the whole bull case for the stock playing out right in front of our eyes.
And take a look at this. The mix of their business is changing, and that's super important. Their MedTech segment now makes up 47% of all their revenue. A year ago, it was only 41%. So why do we care? Because this isn't an accident. It's their whole strategy. They're shifting towards the stuff that grows faster and makes more money, and that lifts the entire company's profile.
So let's peek under the hood of that MedTech business. First up, the Auryon platform. This thing is just a beast. We're talking its 17th quarter in a row of double-digit growth. That is just incredible consistency. And management made it super clear on the call. This isn't just the market lifting all boats. They're actively stealing business from their competitors.
All right, next up, mechanical thrombectomy. This includes their AlphaVac and AngioVac products, and this division is, frankly, on fire, growing over 40%. That's because they're getting into more and more hospitals, gaining traction. You know, this is a huge, fast-growing space, and AngioDynamics is really starting to carve out a serious position for themselves.
And you can't forget about NanoKnife. This platform is also picking up steam, growing over 26%. And the driver here is really interesting. It's almost all coming from its brand new approval for treating prostate cancer. Think about that. This just opened up a massive new market for them.
You know, sometimes you have to listen to exactly what the CEO says. Jim Clemmer put it pretty bluntly on the call. He said, and I quote, "We are growing by taking share from all competitors in the space." That's not fuzzy corporate speak. That's a CEO telling you they're on the offensive. And that sends a really powerful message to investors.
Okay, so a great quarter is, well, it's great. But what really gets Wall Street excited and moves the stock is what comes next. So let's talk about their guidance for the rest of the year.
And yep, they raised it. And not just a little bit, they raised guidance across the board. Revenue expectations? Up. Their forecast for that all-important MedTech growth? Up. Adjusted EBITDA? They basically blew up the low end of their old range. And the earnings outlook is better too. This is management telling you, hey, that great first quarter, that wasn't a fluke. Get used to it.
The Q&A with analysts after the call really confirmed the strategy. They're putting their money where their mouth is, right? They're expanding the sales team for that hot mechanical thrombectomy business by 25% to really press their advantage. They also talked about getting their products through those tough hospital approval committees, which is a huge deal. All while juggling other stuff like tariff headwinds. It shows they're really in control.
Okay, so let's put it all together. What's the takeaway? What's our call on AngioVac from here? Let's talk about how to think about this stock going forward.
All right, here's what you need to watch for. The story from here on out is all about execution. Can they keep hitting these higher numbers? But the big date on the calendar is January 1st. That's when a new reimbursement code for NanoKnife kicks in. Why does that matter? It means it's going to be way easier for doctors to get paid when they use it for prostate cancer, which should light a fire under adoption. We'll also be keeping an eye on some clinical trial updates and just making sure they keep winning new hospital accounts.
So our rating on AngioDynamics is outperform. For us, the debate is over. That multi-year turnaround story, it's done. It worked. Now they've got several different ways to grow,
all in that great MedTech space and a clear line of sight to making real, sustainable profits.
Look, the story has clearly shifted from a turnaround to a real growth story, but we think the market still hasn't fully caught on to how big this could be. Our core thesis is that people are still underestimating how profitable they can get and just how large these new markets are. So what's the play? For most, it's just owning the stock. They have a great balance sheet with zero debt. Now, if you're looking for a higher octane idea, you could look at call options to play that big nanoknife catalyst coming up in January.
This is not financial advice.